to all. This session has been arranged to deliver the tax changes that have been affected the employment income and APIT tables. These changes have come into operation with the enactment of Inland Revenue Amendment Act number 45 of 2022 made to the Inland Revenue Act number 24 of 2017. This program consists of 5 topics. Those are changes in reliefs, income tax rates applicable for individuals, calculation of income tax payable for the year of assessment 2023, advanced personal income tax, that is commonly known as APIT, deduction from employment income, finally different forms related to the tax deduction from employment income. First, let's see the tax changes in reliefs. The situation up to the introduction of new amendment was, for a year of assessment, residents or citizens had a personal relief of 3 million rupees and residents had an expenditure relief of 1.2 million rupees. According to the new amendment, for the first 9-month period of the year of assessment 22-23, residents or citizens are given a personal relief valued 2.25 million rupees. For the same period, residents are given an expenditure relief of 900,000 rupees. If we consider the second 3-month period of the year of assessment 22-23, value of personal relief entitled for resident or citizen individuals is 300,000 rupees, whereas no expenditure relief is granted to the residents since such relief has not been continued. As per the law, any year of assessment commencing from 1st April 2023, that means year of assessment 23-24 onwards, resident or citizens will be given a personal relief of 1.2 million rupees. There will be no expenditure relief for residents. Now we will move on to the changes in tax rates for residents and non-residents. Drawing your attention to the previous situation, taxable income of a resident or a non-resident had been taxed at on first 3 million 6%, on next 3 million 12% and on the balance 18%. As per the Inland Revenue Act number 45 of 2022, tax rates and slabs have been changed and accordingly based on the taxable income for the first 9 months of year of assessment 22-23, first 2.25 million is taxed at 6%, next 2.25 is taxed at 12% and balance is taxed at 18%. For the second 3-month period of the year of assessment 22-23, there are 6 tax slabs and rates. Each slab consists of 125,000 rupees and rates are started from 6% and continue as 12, 18, 24, 30 and the balance of taxable income maximum rate is 36% will be applied. Taxable income of a resident or a non-resident shall be taxed for any year of assessment starting from 1st April 2023 is under this way. For first 500,000 6%, second 500,000 12%, third 500,000 18%, fourth 500,000 24%, fifth 500,000 30% and on the balance maximum rate should be applied 36%. Now let's consider how to do the tax calculation for the year of assessment 22-23. This 22-23 is somewhat different and special year of assessment. It can be considered as a transitional year of assessment too. That means tax calculation for this 22-23 has to be done using the tax rates and slabs prevailed as well as new tax rates and slabs that have been come into operation by the new amendment. Two periods have to be considered for the tax calculation of year of assessment 2023. First 9-month period from 1st of April 2022 to 31st December 2022. Second one is second 3-month period from 1st of January 2023 to 31st March 2023. For the two periods mentioned, calculation shall be done separately following the actual basis. But if an individual has a business income, he shall apportion his income on pro rata basis 75 to 25 and calculate the tax separately. Deduction of advance personal income tax APIT from employment income. According to the law prevailed, an employer shall deduct APIT from an employee if such employee is a resident and citizen who gives his consent. In the case of other than resident and citizen employees, employer can deduct regardless of their consents. However, as per the new amendment, giving consent by a resident and citizen employee is not needed for the deduction of APIT. Deduction of APIT is mandatory now. Gazette notification on regulations withholding by employers will be published sooner and it is effective from 1st January 2023. Guideline for employers on deducting advance personal income tax from employment income has been issued under the circular number SCC 2022 E4 dated 22nd December 2022. It is related to the second 3-month period of the year of assessment 22-23. There are APIT tax tables to be referred to by the employers in the event of deducting APIT from their employers. You are already aware about tax tables from previous year of assessment. Likewise, you can find 7 tax tables for this 3-month period. The guideline for employers as well as APIT tables are downloadable from the Inland Revenue official web portal under Publications APIT Table Year of Assessment 22-23. There are 7 tax tables. Those are monthly tax deductions from regular profits from employment. Tax table number 2, rates for the deduction of tax from lump sum payments. Considered period is second 3-month period of year of assessment 22-23. Third one is available for rates for the deduction of tax from once and for all payments, normally known as terminal benefits. Number 4 reserves for tax deduction from any profit from employment of non-resident employees who are non-citizens in Sri Lanka. Number 5 tax table is available for the deduction of tax on cumulative gains and profits from employment considered period second 3-month period of the year of assessment 22-23. Tax on tax rates is available under tax table number 6. And finally, rates for the deduction of tax from the secondary employment is visible under tax table number 7. First tax table is tax table number 1, monthly tax deductions from regular profits from employment. This table is applied for all resident employees and non-resident but citizen employees. The table has been compiled excluding the monthly personal relief valued 100,000. Therefore, you are not required to remove that 100,000 rupees when using the tax table number 1. Tax has been calculated using the progressive rates that are effective from 1st January 2023. Summarized tax table for the regular profits has been also presented for your convenience. You can use this summarized table or this table that has been compiled with the aid of MX Excel to find out the APIT deductible. Let's move on to tax table number 2, that is available for rates for the tax deduction from lump sum payments for the second 3-month period. This can be used for payments like bonus, incentives, salary arrears, etc. made to resident employees as well as non-resident but citizen employees. A table has been prepared to find out the tax deductible based on the estimated gross aggregate remuneration, which is called EGA or also called D. D is the sum of gross aggregate monthly remuneration already paid, named as A, gross aggregate monthly remuneration to be paid, named as B, and finally gross aggregate lump sum payments already made, being made or payable, named as C. Once the value of D has been calculated from this table, search for where the D falls. Then select the appropriate equation and calculate the tax for the lump sum payment. Tax table number 3. This has been designed for the once and for all payments commonly known as terminal benefits of employees. Employer shall retain tax according to following circumstances. Retain 30% of tax on any following payment or benefit. Those are compensation for loss of office or employment which is not approved by the Commissioner General of Inland Revenue, as the scheme is uniformly applicable to all employees. Second one is payments from other than a regular provident fund which has not been approved by the CGIR. Third type of payment is any other payment, and finally non-cash benefit received at the retirement. If the aggregate amount of commuted pension, retiring gratuity, compensation for the loss of office or employment under a scheme that has been approved by the CGIR as a uniform scheme, any sum payable from the ETF exceeds 5 million rupees, employer shall retain 12% on the excessive amount. As employers, employees have to be instructed to get directions within 90 days of the retention date from the payee audit unit at Navammavat. Tax table 4 is allocated for the tax deduction from any profits from employment of non-resident, non-citizen employees in Sri Lanka. Personal relief 1.2 million for annum or 100,000 per month is not granted for the non-resident, non-citizen employees. There are two tax tables under the tax table number 4. First, tax table number 4.1 is applied for the tax deduction from monthly regular gains and profits from non-resident, non-citizen employees in the country. You can see that monthly personal relief of 100,000 has been excluded in constructing this table. Table number 4.2 has been compiled to calculate the tax to be deducted on lump sum payments of non-resident, non-citizen employees. Tax table number 5 is available for tax deduction on cumulative gains and profits from employment. This is applied for resident or citizens. There are two incidents to be considered. If an employee's monthly regular profit is less than 100,000 rupees but cumulative gains and profits from employment is more than 300,000 up to any month within the 3-month period, or secondly, if an employee starts his employment or he retires. Tax deduction should be done at the time of cumulative profits and gains up to a month exceed 300,000. After that, tax deduction should be carried on until the end of the 3-month period. Tax table number 5 has been prepared using Microsoft Excel and can be downloadable from our Inland Revenue official web portal. Tax on tax rates are available under tax table number 6. There are two situations where tax on tax application is adopted. First, an employee's income tax liability is settled by the employer or any other person without being deducted from the respective employee. Second, an employer reimburses the income tax of the employee that has been already deducted from the employee's salary. In the event of calculating the tax deductible, first calculate the monthly tax payable in accordance with the tax table 1, tax table 4.1, tax table 5 or tax table 7.1 as the case may be. Then find out the tax falls where in the table 6.1, apply the rate thereon and calculate the tax on tax. Finally, total income tax payable by the employer is the total of the both. Cumulative tax on tax rates have been displayed under table 6.2. As the same way of using table 6.1, you can calculate the tax payable on lump sum payment or once and for all payment by the employer. Tax table number 6.3 shows the tax on tax rates for the secondary payment of a non-resident employee. Last table, tax table number 7, it is available for rates for the tax deduction from secondary employment. This 7.1 table is the tax table applicable for the secondary employment of a resident employee. Tax payable is calculated by applying the tax rate corresponding to the primary employment of the employee on the remuneration received from the secondary employment. Likewise, rate applicable for the secondary employment of non-resident employees is 36%, the maximum tax rate. Every APIT table is presented with examples with the aim of delivering a practical usage to our taxpayers. Therefore, please read them before the tax deduction. Now let's consider the non-cash benefits. Where a value of a benefit given by an employer to an employee, such as company shares awarded, housing facility, transport facility and other benefits cannot be ascertained, CGIR has quantified values for such non-cash benefits. The relevant circular has been issued on 22nd December 2022 under SCC 2022 E number 5. You are expected to refer to the circular in ascertaining the employment income for the APIT deduction purpose. Different forms related to the tax deduction from employment income. First form is called Certificate of tax deductions that is commonly known as T10 certificate. This T10 has been designed covering both periods in the year of assessment 22-23, first 9 months and second 3 months. Employers shall serve the duly filled T10 certificates to their employees not later than the 30th day of April of a particular year. Second form is primary employment declaration. An employee should furnish an employer with a declaration nominating his primary employment. If an employee has one employment, furnishing a primary employment declaration is not required. However, an employee must not have more than one primary employment at any one time. Secondary employment declaration. Secondary employment means any employment that is not the primary employment of a particular employee. At that instance, employee has to furnish his secondary employer with the secondary employment declaration. You can download T10 primary employment declaration and secondary employment declaration from our IRD official web portal under downloads, forms and returns and forms. We as IRD do hope that facts presented based on the tax changes related to the employment income that has been enacted by Inland Revenue Amendment Act number 45 of 2022 and application of tables help you enhancing your knowledge in taxation. Good day.